6 days ago, the Chinese startup DeepSeek announced a new artificial intelligence model. And today, January 27, 2025, the US tech markets are bearing the consequences, with cryptocurrencies also feeling the impact. In this video, I'll quickly explain what happened, why it has had a negative effect, and why it could continue to push certain assets downwards, particularly those related to artificial intelligence. DeepSeek is a Chinese startup founded in 2023 that develops large language models, LLMs, similar to OpenAI ChatGPT or Google's Bard. A few days ago, the company unveiled version 3 of its model, DeepSeek version 3. This model offers impressive performance, comparable to, or even surpassing, the results of the models I just mentioned. Around January 22, they announced and released this model, which has started being adopted by the tech-savvy community. The results from this model are raising serious questions. As you may know, there is significant competition between China and the United States, particularly in the tech sector. Currently, artificial intelligence is a market largely dominated by the US, but China has sent a clear message. AI is no longer exclusively an American domain. This is the first non-American model to achieve performance that rivals or surpasses existing leading models, signaling that China is firmly in the race. A few days after the announcement, former US President Donald Trump declared a $500 billion investment plan for artificial intelligence. This news rattled investors who had heavily bet on US tech companies. Adding to the disruption, DeepSeek achieved these results with significantly fewer resources. While training a model like ChatGPT can require anywhere between $100 million to $1 billion, DeepSeek managed with just $5 to $10 million. This raises questions about the efficiency of current US AI development costs. Moreover, despite the restriction of access to top-tier US-made chips in Asia, DeepSeek managed to deliver exceptional results using less advanced hardware and fewer financial resources. This achievement forces us to consider what the startup could accomplish if it had access to better chips, higher budgets, and more resources. DeepSeek's success, produced with 20 to 30 times fewer resources, sends a strong message to investors. US tech might be overpriced. In a sector as new as AI, where hype and speculation dominate, determining the true value of these technologies is inherently challenging. If groundbreaking results can be achieved with much lower costs, investors might begin to question the lofty valuations of American tech. One of DeepSeek's most significant moves is that version 3 of their model is open source. Unlike proprietary solutions like Google's Bard or OpenAI ChatGPT, DeepSeek's code, settings, and structure are publicly accessible. Developers can use, modify, and integrate this model into their own solutions. This open access approach could advance the state of the art in AI even further by fostering collaboration and innovation within the global AI community. If DeepSeek's announcement happened over a week ago, why are tech stocks and cryptocurrencies plunging now? It's simple. Understanding the significance of a new AI model takes time. Initially, the community tests the model, compares its performance, and validates its claims. Experts then communicate their findings, which eventually influence broader sentiment, including among investors. Unlike cryptocurrency markets, which operate 24/7, traditional financial markets close on weekends. Thus, it wasn't until Monday afternoon, January 22, that the effects started to show in stock prices. For example, NVIDIA, a key player in the AI sector, lost nearly 18% of its value in 24 hours, amounting to $500 billion, or $500 billion. Microsoft also saw its value drop by 4%. The Nasdaq as a whole experienced a red session. Cryptocurrencies, however, began reacting over the weekend, as these markets never close. Once investors realized the tech market would likely falter, they started selling crypto assets. In just 24 hours, Bitcoin dropped by 6%, and Ether by 9%. Altcoins, which are often more volatile, saw even sharper declines. The global cryptocurrency market capitalization fell by $250 billion. The correlation between cryptocurrencies and U.S. tech stocks has reached historic levels, further amplifying this effect. Additionally, many cryptocurrency projects are tied to artificial intelligence, making them particularly sensitive to developments in the AI sector. For instance, Binance's DAO token, a decentralized network for training AI models, initially fell but quickly rebounded as developers recognized the open source potential of DeepSeek version 3. The open source nature of DeepSeek's model could accelerate the creation of more affordable and accessible AI solutions. This shift might disrupt the existing valuation standards of the AI ecosystem. If DeepSeek and similar initiatives continue to progress, investors will likely reassess the value of existing AI solutions, especially those with high price tags. In the broader context, the release of DeepSeek version 3 has advanced the AI field, providing opportunities for developers worldwide to innovate at lower costs. In the cryptocurrency space, this could lead to the development of more efficient AI-based agents and solutions. While the short-term market reaction has been largely negative, the long-term implications could include both positive and negative outcomes. This announcement marks the beginning of significant changes in the AI sector. As the market adjusts to these developments, we can expect further announcements and disruptions from DeepSeek and other players worldwide. The release of an open-source, high-performance AI model is a game-changer that could redefine the landscape of artificial intelligence and its applications across industries. Stay tuned as this story continues to unfold.